Hey everybody, thank you for watching. This is Anthony Rosa, credit specialist with Fresh Start Advancement, and today we're going to be talking about the journey to home ownership. You might see some familiar faces. This is Randy Rey and Elizabeth Tapia, and they're my friends in real estate. As a credit specialist with Fresh Start Advancement, my goal is always to inspire, connect, and educate you on how to have a healthy credit report. And so today, as we talk about our journey to home ownership, we're going to be talking about a ton of facts. We're going to be giving you a lot of information. We hope to engage with you. So if you're watching on the live, hashtag live. If you're watching on the replay, hashtag replay. So with that said, let's get right into it. So Elizabeth, why don't you start us off, introduce yourself, and we're going to go right into it.
Thank you, Anthony. Happy Saturday, everybody. This is going to be a great seminar to help you achieve your dream home. Can you play? There we go. My name is Elizabeth Tapia. I'm a lender from Guaranteed Rate. I've been doing this for 20 years and love my job. So I'm going to get right to the point. This is the journey to homeownership. Everything you need to know about buying your first home. There's going to be lots of communication, lots of hand holding. So that's what we're here for you. Fixed rates. We're going to talk directly about fixed rates. Everybody usually over the years wanted to get into a fixed rate. So I'm going to tell you that there's other options. Okay. The advantages of fixed rates, obviously, is because you know what your mortgage payment's going to be. It's going to be the same payment every month. Purchasing a home is a long-term investment. So this is something that you definitely want to get into. After a year, sometimes I always have to clarify with a lot of my clients, just because you're signing into a 30-year fix, it doesn't mean that you're going to stay with that mortgage payment through your whole life. If the rates do get better after a year, we definitely want to put you in a better position and be able to refinance. Okay. The second option is adjustable rate mortgages. That's a new option. That before, maybe it wasn't that attractive. The rates were nice and low, but now we're looking into adjustable rate mortgages. Let me see if that's an option for you. So those rates can be 5-year fixed, 7-year fixed, 10-year fixed, and then it's going to be variable. Now, everything is done on paper, so that way you could see what is going to be your best, your worst case scenario, meaning your monthly payment. So again, these after a year, you could always refinance. If the rates get better and they're looking around the same thing, you could always jump into that. Okay. So with adjustable rate mortgages, obviously, the benefit about that is the monthly payments is going to be a bit lower. Loan options. The type of loan options are jumbo loans, confirming loans, and renovation loans. Let me talk a little bit about renovation loans. Renovation loans is something, if you're buying a house and you don't like the kitchen, you don't like the bathrooms, you can always upgrade it. We are going to give you that money to fix that bathroom or upgrade that kitchen. So that's always an option. Government loans. We have the FHA, the VA, the USDA. So with the FHA loans, you only need 3.5% down payment. So you may be able to go into a home with just a really low down payment. The beauty about the FHA loans, the mortgage insurance went down, so it makes our payment a little bit lower. Okay, I'm going to go into what are the 5 steps to a perfect loan. So the first step is submit an application through the digital mortgage app. I'm going to send you that link. There is nothing that you're tied to me. This is the process of getting information and giving you options so you can make a decision. What I'm going to need from you is 2 months pay stubs. I need to verify your income, what is on paper. I need to maximize it. So I'm going to consider all your overtime, bonus, anything that you have there to help me give you the best option. 2 months bank statements. We need to make sure you have enough for down payment and closing costs. So I want to make sure that money is in your bank statements. 2 years federal tax returns. If you are self-employed, then I'll ask you for that. If you're getting rental income, yes, I'm going to ask you for your tax returns. If you are salary and you just get W-2s, I'm just going to ask you for your 2 years W-2s and your pay stubs to help me calculate your income. I am going to need an HR contact information, because if I'm factoring your overtime, I may just want to get that check mark from them saying that overtime is going to continue. Okay. Now, after this, let me tell you the difference between pre-approval and pre-qualification. Unfortunately, in the bank these days, some banks will give you a pre-qualification just because you give them a smile. It's not the best scenario at all. You want somebody that reviews all your paperwork, as that way we can present you as a solid buyer. So that's something huge. If you go into a home with your family, everybody gets excited, you need to know that in the back of your mind, everything has been reviewed, and you know how much money you need to purchase that home. Okay, so I'm going to go to my next slide, and there we go. The steps to buying your first home. We need to calculate what your monthly payment is going to be. I can tell you qualify for $5,000 a month, but you can tell me, no, Elizabeth, I only want to pay up to $4,000. So that's something that we're going to work with Randy in making sure that we get you to your goal. You're going to receive your pre-approval letter once we have come to what your goal is. You're going to be working with Randy. Randy's going to take you by the hand, show you lots of options, and he knows about homes, so he'll also tell you some tips of how to upgrade something or what problems there may be. We want everything up front. Okay, decide what kind of home you have. Don't just narrow down to just going to look for multifamily houses. There's lots of options out there, and Randy will take you to all of those. After you find your home, make an offer. We schedule, if your offer gets accepted, then you're going to schedule home inspection. We're going to get you a homeowner's insurance, close the loan, get your keys, and move in. Sounds simple. There's lots of hand-holding. There's lots of communication. So you have a great team here that is going to help you to get through every point. So that is it from me, and I will send it over to Anthony.
Thank you so much, Elizabeth, and thank you for providing all those very important points. When buying a home, some people are a little intimidated, and from a renter's perspective, I think that the way that you broke it down, talking about how and what differentiates you from guaranteed rate from other lenders, in the news we're hearing that there's different thresholds on credit scores. So it's really refreshing to hear that there are some products out there that you can support them with, and it's really refreshing, Elizabeth. So thank you so much.
Oh, you're welcome. These days in this market, we need lots of options. So that's something that Guaranteed Rate can help you out, and I can help you and lead you the path.
Awesome. So as a reminder, those that are watching the Journey to Home Ownership, if you have any questions, please feel free to like, comment, and engage. With that said, we're going to be moving on. This is the funnest part, I feel, when you're searching for the home and you're really getting that professional advice from someone that has the experience and is going to take you from A to Z. And so with that said, Randy, I'll pass it to you.
Awesome. Thank you, Anthony. Thank you so much. Before we jump into the presentation, I just really wanted to discuss where we are in this market right now, because if you're not following the news or you're not really watching anything related to real estate, except maybe looking at Zillow or Realtor.com or something of that sort, which is a great place to start, you really need to understand that what we have and what we're dealing with today is a seller's market. What does that mean? It means that the seller is at the advantage. Not necessarily that he can name whatever price he wants, but that he can have more options of who to pick as the buyer that he or she wants. So if you're offering $500,000 for the house and they're offering $500,000, but they can close in 30 days, I might want to lean in that direction. So there are advantages and there are tricks and there are tactics that a good real estate agent can help direct you to make you look like the stronger candidate. That being said, in a seller's market, there is more competition. As I mentioned, you're going to have other people bidding on the same house. There are lesser homes available. So of that limited pool of houses, there's going to be a lot of competition. So I'm here to steer you in the direction, to give you the best advice, the best recommendations on where to put your investment, where to put your offer, how to present that offer, any strategies, tactics, tips that are going to make your offer more presentable, more powerful, put you at the top of the list when that seller is looking to choose a buyer for their home. So we start with just breaking down where we are in the market, we're a seller's market. Now, another thing that's been brought to my attention lately by a lot of clients is, I want a single family, I want a single family. There are more options out there, and that's where my presentation comes in. I want to make you aware that there are more than one option. So we're going to jump into this right now and show you. So here I am. I'm Randy Rey. I work with Century 21. Been doing this for some years now, and I really do enjoy helping people and helping them get established and moving forward in their lives. This is the biggest investment that most people are ever going to be making. So hopefully using the team that we've established here between Anthony and Elle and myself, we're going to get you where you want to be. So we're going to talk about the process of purchasing your first home in New Jersey. We're going to explore a couple of mortgage types without going into great detail because that's Elle's business to discuss. And I'm here to show you that there's more than one type of home. We're going to be talking briefly about condos, multifamily homes, townhouses, and of course, single family homes. All of these are options for you and I and anyone that you know that wants to buy a home. So meet Tom and Lisa. They're looking for their first home and they decided to go in a condo. Some of the advantages of a condo are that they're generally less expensive than your average single family home. Another advantage is that you don't have to worry about things like shoveling snow or cutting the grass because you're paying HOA fees, which can vary depending on where you choose to live. If you want to live closer to the city, your HOA fees tend to go up a little bit. If you live further out in the rural areas, the HOA fees go down. So it's all relative. Keeping that in the back of your mind. Some of the advantages of owning a condo, they can be located in a variety of places. Like, for example, here we are in Northern Jersey. Fort Lee has a lot of condos and similar areas in that whole stretch facing New York that tend to be higher in HOAs, but lower in initial price. So maybe this is something that you should consider. Again, you don't have to worry about cutting the grass or shoveling snow. So condos are great for first-time home buyers. And some of the other advantages is that they offer things like a swimming pool or a gym. So that can save you money. You don't have to pay for memberships or pay to go to private pool clubs or things of that sort. So these are just more things to consider. Some offer daycare services. So that saves single parents, that saves you money. So you need to look at that option as well. Next, we're going to jump into another scenario where condo. Tom and Lisa, the same couple, they're looking at a house that costs $350,000. So going very simple, and these are just general numbers, with 3.5% down payment, that's about $12,250. Closing costs for something that could be about $10,750. So all in, they're about $25,000 in to get their first home that costs $350,000. Now I'm going to be honest, I went a little bit high on the closing costs. They range between 2 and 5%, and in each scenario, it can be slightly different. So just keep that in mind. These are approximate numbers just used for example purposes. So these are higher end numbers. It could be a little bit lower. Let's continue going. All right, so their all in is about 25 grand and they can move in to their first home being a condo, $350,000. So now this gentleman here is looking at a multifamily. It's Mike and Emily, this couple, they're looking for property to get some kind of rental income. They wanted a home with some character, some history. And this is going to be a great opportunity for them because they're going to have somebody sharing the mortgage payment with them. They found a home that cost $500,000. And what's involved in that with 5% down, because they're going to be living there, is about $25,000 for a down payment and closing costs of $35,000. So all in to a multifamily home is about $60,000, right? They put that money in and then going forward, the mortgage cost will be shared with a tenant. So it's not all coming out of their pocket, whereas a single family home, everything is paid for by the owner, that being you, all right? Another option is a townhouse. Townhouses are beautiful. For a first-time home buyer, they offer a lot of similar benefits to that of a condo, except sometimes you have a little bit more space. Sometimes you have a backyard or a patio or a barbecue, something of that sort to enhance it, make it a little bit nicer. And again, you're not shoveling snow, you're not cutting the grass. That's covered by HOA fees. So we have a variety of options available in the mortgage side. So we have government loans that offer 0% interest. We have FHA loans. Those numbers vary as far as interest rates, conventional loans and cash purchases. These are options that you're going to be discussing with Elle. And once you've got that sorted out and you've got your pre-approval in hand, that's when you come and talk to me. And we're going to do some shopping. So the last option or the last example is, of course, a single family home, as I promised to mention. And here's a couple here. They're looking for a place that has a big yard for the kids to play in and a property that they can call their own. This is a great option. Single family home is still a good option, and there are plenty available. Even though it's a seller's market, I can still show you live today using our MLS in New Jersey what's available in distinctive markets. So I'm going to jump out of this and I'm going to jump in quickly into my MLS. Anthony, if you can help me switch screens there. We're going to jump into MLS. All right, so let's go there. Yes, exactly. And I'm going to show you very quickly what's available in this market. Now we're going to just go for residential home, single family. We're looking for a minimum of 3 bedrooms. We're going to choose Essex County. Let's indicate Essex County, right? That's been chosen. And we're going to limit it to $500,000. We're not all rich, but you know what? A good, healthy home could run in about $500,000 or less. And look at what comes up. 143 homes are presently available in Essex County. This is what I have to work with. Some of these indicated with an asterisk are in contract, but look at this number of homes, and it ranges for different neighborhoods. All minimum 3 bedroom, some are bigger. But I just really wanted to let you know that even though it's a seller's market, it's not that there are no houses available. We do have a little bit of a lower inventory, but that is changing. So let's jump back to the StreamYard and we'll continue on. Anthony, thanks for giving me the time to talk and share that information.
Wow, that was amazing. I love the video, the illustrations, the breakdowns of the families. I think it really makes it personal. And I think that there are people that could relate. So whether you're buying a condo or a townhouse, I love the idea of a condo, right? Who wants to clean their snow and throw out their garbage? Multi-family homes, townhomes, there's so many options. And then to illustrate using the MLS that there are houses on the market where people may feel that there are not enough. So if you have partners like Randy that knows how to maneuver in the systems, get you from A to Z, you're working with L that's going to be able to collect all the paperwork, get you through that underwriting process, get you the pre-approval, get those, that approval for the keys. This is what it's all about, guys. So for myself as a financial coach, what I wanted to do today is I wanted to talk about 5 financial remedies, okay? I've been practicing financial literacy credit repair since 2015. And as a credit specialist, the first thing that I talk about with my clients is monitoring your credit. I tell you, monitor your credit is so important because there might be information that's on your credit report that you may not know that it's there. And if you are monitoring your credit report and there's a new account alert of an account hitting your credit report, if you're proactive and you're monitoring your credit, you'll be able to catch it much faster. Whether that be a late payment, whether that be a collection, whether it be a name variation, whether it be an inquiry, you want to make sure that you're monitoring your credit so that you can make sure and you're staying on top that things don't fall through the cracks. So monitoring your credit, download Experian, download TransUnion, download the app with Equifax, download Credit Karma, go to annualcreditreview.com. There are so many different ways where you can go to download to see your credit. The next one that I want to talk to you about is on a daily basis, review your bank statements, stay proactive. Time and time again as a banker, when people are depositing checks or sending checks, let's say using example for a Friday. If you deposited a check on a Friday and you sent out some payments on that Friday, chances are that those payments might clear before that check does. And if there's limited funds available and your funds don't clear on time, what happens to that Capital One minimum payment of $25 that you just made if your deposit didn't clear? That check does not pay it. And what happens now is you have an error or a late payment. The number one reason why people damage their credit is because of late payments. And more times than not, it's not because they didn't have the money. It's because they forgot to make the payment. So if you're monitoring your bank statements, you're making sure that you're not overdrafting, you're having enough to clear, you're protecting yourself from fraudulent accounts. Now, I'm not talking about the credit report. I'm talking about your bank statements. So every single morning, I go to my Wells Fargo, I go to my Capital One, I go to my accounts, and I verify my transaction history. I don't want that if I went to the restaurant and I spent $100, I don't want them to clear it in 150. It may have been an error. Maybe they used my card for another client that they were assisting at the time. It happens. These errors happen. So you want to stay proactive and review your bank statements. The next one that I want to talk about is auto pay. A lot of times, especially if you have kids, you're running a business, you might be a little bit forgetful. You might be the one that is always looking to find your keys. Where are my keys? Where are my keys? Right? So if you find yourself a little bit forgetful, set up auto pay. I had a client that this person was a 580. They got to a 720 in 6 months. After the program, we're all happy, smiling, shaking hands. Couple months go by, this person calls me and says, Anthony, you wouldn't believe it. I went on vacation. I forgot to make my payment to my auto loan. I left the check on the table. My credit score dropped. Now I have a new late payment. What I'm trying to say is that if you are the type that you might be a little forgetful or you need some help, some reinforcement, set up an automatic payment. Set up an automatic payment, pay in full. So that when you're making the payment, make sure the funds are available by reviewing your bank statement, but make the payment in full. If you make the payment in full, you will never pay late. You won't pay interest because you're paying what you used, and you're satisfying your utilization. You're keeping it under that 15% mark. Because credit is made with 5 different factors. And if you're having high utilization creates 30% of the credit score. So paying late creates 35%. Having a high balance is 30%. So keeping a high balance and paying late, you're impacting credit by 65%. I don't know about you, but I'm in it to win it. And if I know and I recognize what to do, then I know what not to do. The next part that I wanted to talk about is do not pay collections without validations, right? So you don't want to pay these collections right away. If you pay them right away and they update, they might just update as paid in full. And if you're going to go to the lender and the lender is reviewing after they've submitted the application, the underwriter is giving us these factors or these delinquent items or these negative reasons that you're not getting approved. If you have a collection account, the process with an account is if you have an account that closes with a balance, the account typically goes to charge off. So if you have any collections, if you have any accounts like with Capital One that are closed with the balance and they're charged off, but they're not in collections yet, be proactive. Because a lot of times when an account gets charged off, there's some time that it goes into collections. You could catch it before it goes to collections. And if it's already charged off, try to negotiate or pay in full if you like, but close that account. Because if you don't close it, every single month, it just continues to update closed with a balance. And it's a red remark that hurts you. But if you have a collection account, on the other hand, you need to find out, are they the owners? Are they collecting on behalf? If you have any collection accounts? Because if you're not dealing with it and you're not being proactive, what can happen to a collection account is it can get sold to an attorney or an attorney could pick it up and now you have a judgment. And if you have a judgment, now they can do whatever they want. They could do a bank levy. They could do a bank freeze. They can take your money without you knowing. And so if you have any collections, I would love to call them, represent you. You would authorize me to speak on behalf. I would speak to the collection agency. So if you have any collections, let me call them for you so that we can figure it out together. The last part is know the difference between the cycle date and the due date. Now, what I'm talking about here is I'm talking about some remedies on how to have a healthy credit report. These are my 5 financial remedies. And so the difference between the cycle date and the due date, I would love if anybody that's watching right now on the live or on the replay, type in right now, what do you think is the difference between a cycle date and the due date? Well, I'll tell you. If you have a credit card and you're using the credit card, you have a due date. That due date, typically you have to make a minimum payment, let's say of $25 before the 9th of the month. So on the 9th of the month, you have to have that minimum payment paid. Otherwise, your account is late. But what happens to the one that their credit is just not moving? You're making the minimum payments and you're realizing, Anthony, my credit score is not moving. I'm making my payments, I'm paying on time, but what's happening? I'll tell you. If you are using the credit card after the cycle close, after the due date, and the balance goes up by the cycle closing date, your score can automatically go down. I just talked to you about that 30% of your credit score is created by your balance alone. And the rule of thumb, a lot of people think is 30%. Is not. It's 15%. So these are my 5 financial remedies that I wanted to share with you. I hope that you learned something new today, whether you're on the market of buying a house, whether you're on the market of buying a real estate property for investment. Here are the partners and the community advocates that will work day in and day out for you. So as we're rounding third base and we're going to our final thoughts of the segment, I would love for you guys again to like, comment, and share. Tag a friend or a family member that's still renting. If you know somebody that's renting, tag them right now, all right? And so with that said, we have some final thoughts. So any final thoughts? Come off mute.
Well, as I was saying in the back of my presentation, is that the misconception that there are no houses available, slim pickings, is a fallacy. The numbers are increasing. It's giving us more options to choose. So if you were outbid, if your agent didn't push hard enough or fight for you, you want somebody more knowledgeable, somebody more experienced, give me a call. Contact any members of our team or call me direct. Our contact information is in the info on the card after the video. And reach out to us, and we can certainly be there to help you when you need us. Any one of us can help you.
So I want to say hello to Sean, hello to Megan for watching. Thank you for watching. If you have any questions about the journey to home ownership, please feel free, like, comment, and engage. Elizabeth, any final thoughts?
Well, I'm going to say this is a tough market. It's a different market. You need options. You need to know what is the game plan. So we're here to help you out. Give us a call. I'm available. This job is 24/7 these days. So the weekends, we need to make sure we're available for you because yes, Sundays is when everybody is submitting their offers and Mondays is a killer, which is fine. And we're ready for you to help you out. It is a tough market, but then again, you do need a really great team behind you.
Absolutely. So if anybody has any questions, please feel free. You'll be able to watch this again on the replay. But with that said, I hope you guys all have a beautiful day. It's beautiful out there. Today's Saturday. Enjoy your weekend. Please feel free to ask us any questions. Reach out to us. Today's going to be a beautiful day. Go in grace. Go in peace. I'll see you guys soon.
We'll see you soon. Thanks for
See
joining.
you soon. It was a pleasure.